Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwibank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets and analyse the issues impacting the Kiwi economy. Let's get into it. Kia ora, welcome back to another episode. Today we're going to be talking about how people keep leaving the beautiful shores of Aotearoa. It's a bit sad because we all love New Zealand, but it does really just reflect, I guess, the state of the economy right now. There's few opportunities and, you know, if we look at where most people are going, it's Australia. Can you believe it? That's all I'll say on that. But so we thought, why don't we do a side-by-side comparison to see how the Australian economy and the New Zealand economy are stacking up. Now, the three of us, we're all Kiwis, so you might think we're going to be a bit biased and, you know, vote in favour for New Zealand. But we're also all economists, so we look at the numbers, you know, you can trust us. But if that's not enough for you, Jarrod did live in Australia for how many years?
13 years.
So you're basically part Australian by now.
Yeah.
MJ's going over there for a holiday. So, you know, we're going to be pretty sound in this and really stack up the two countries. But first of all, why don't we actually start with just looking at migration in New Zealand overall, what's happening there? We did get some of the latest data out there last week. MJ, do you want to talk on that?
Yeah, so our net migration is exactly what you said. It's really fallen off. We had a peak of around 130, 140,000. That's fallen down to 13,500 in the year to June 2025. There's two parts to that story. You've got arrivals that are kind of stabilizing, but it's not growing anymore, just reflective of how weak our economy is on a relative basis. And then departures, they just continue to climb. And departures, 60% of those leaving are New Zealanders. And like you said, they're mostly going to Australia. On that net Kiwi outflow, which is typically what we see, has risen to 46,000. So it's around those record high numbers. So yeah, exactly. People are leaving, and it's just a reflection of our economy.
But that's a net 40,000, right? What's the actual number of people leaving?
71.8 thousand.
Yeah, it's pretty big, right? People coming back, sure, but 70-odd thousand. That's a record, right?
Yeah. It's close to the record high. I think the record high is around 72,000.
Yeah.
Which was back in 2012.
Which was back in 2012, yeah.
And that was the Australian mining boom.
It would have
right. So they had this massive Gorgon project. They were digging holes everywhere and making a fortune.
Yeah. And talking about Australia, that net migration move, I think over the last year, I think it was to the year to December 2024, I think we had a 30K net migration loss to Australia, which is the highest we've seen in about a decade since the Aussie migration boom. I think in the years between 2014 to 2019, we were only usually seeing a net migration outflow of about 3,000. So, we've 10 times what we were in the past sort of eight years. And now we're going back to those Aussie mining boom levels, right?
Yeah. This has been people raise it and they go, oh, this is the first time, this is terrible. It's like, well, actually, throughout my entire life, this has been an issue. I remember it being raised in the 80s, and we had a famous or infamous politician at the time, Rob Muldoon, turned around and said, well, the good thing about Kiwis leaving for Australia is that it increases the average IQ of both countries. So I thought I've used that quite a few times, that line. But, it's a thing. Like, Kiwis leave. That's what apart from you. But Kiwis do leave. We go on our OE. We like to travel. It's just whether we come back. And, what concerns me about this current episode is that there's not much to come back to.
But you say that, but actually, interestingly, we've seen, a lot of that outflow of New Zealanders is a bit of a payback from COVID. They couldn't leave at that time. So we saw a really big increase in departures. But I was just looking at the data, and I think since around middle of last year, the arrivals of New Zealand citizens have started to turn. So they're starting to come back. Not a huge turn up. Yeah. So that net outflow of 46,000 New Zealanders could actually be a lot deeper if we didn't see a few more arrivals coming from New Zealand citizens. Yeah. It's kind of interesting.
Yeah, right. But nuts and bolts of it is that, a net outflow is generally because of better prospects elsewhere, right? So the Australian labour market is, offering more opportunity than here.
Yeah.
But it's interesting that we've seen that little bit of an uptick.
Yeah, it could just be that they go away for a couple of years because they would kind of coincide with going away after COVID, leave for a couple of years, come back. But it's not a very strong trend just yet. What is steadily strong or steadily rising is that departures of New Zealand citizens is still rising.
Yeah.
And that comes down to the weakness in our labour market here, as you said. And, if we're looking at where they're going to, which is Australia, I think we're a whole 1 percentage point higher in unemployment here than they are in Australia. Here we've had employment running backwards. In Australia, they're still actually having quite decent job growth. So there is that pull, and I think wages as well. I think we did an episode on the Kiwi labour market all of last week, so I'm trying not to re-go over all those numbers. But compared to Australia, our wage growth, I think, we're at 2.3%. There's that 4.3 for the June quarter. So it's really easy to just stack up the numbers and go, yeah, you can see why they're leaving. Yeah,
exactly. And, I don't see that turning around immediately, right? I think you've had both the RBA and the RBNZ, have stuffed up, I think, over COVID. Like many central banks, they stimulated too much and then came out of it and had to hike. The Aussies didn't hike as much. Right, they did not clamp down as hard as the Reserve Bank of New Zealand. Reserve Bank of New Zealand had this kind of residual fear of inflation because it was running a little bit high into COVID, that it was going to come out being extremely hard to tame. Well, actually, they more than tamed it. Both central banks have got inflation back below 3, if not temporarily. But, the Aussies didn't force a recession. I think that's the big thing. So, Adrian Orr openly admitted that he wanted a recession here to tame the inflation beast, whereas the Australians just kind of let things ride.
Yeah, and I think it's because of even the reason why the Reserve Bank had to hike a lot more than Reserve Bank of Australia is because it was a much harder job to correct the economy, because if you go the cycle before that, the easing cycle, we had the RBA drop the cash rate to 0.1%, and then you had the Reserve Bank going down to 0.25%, but the Reserve Bank of New Zealand was still flagging negative interest rates. So that added more stimulus than was necessary, whereas the RBA completely took that one off the table. I know that's probably a soft spot for you, negative interest rates.
Oh, don't get me wound up again. We were fierce opponents to it, weren't we? We sort of came out quite open in that we do not think negative interest rates work. In fact, I think it has the opposite effect. Anyway, we didn't get there, but they were talking about it. They prepared the banks for it, whereas it wasn't a thing in Australia. Australia wasn't perfect either. Like, the RBA came out and said, we are not going to lift the cash rate for 3 years. Just to squash that front end and push those interest rates even lower. So there was a lot of jawboning and a lot of action trying to stimulate things. I think we find ourselves in a situation now where the Aussies have kind of sort of ridden through it a bit better than us, and we're struggling to get out of a recession, which looks like it was only recorded last year, but actually on a per capita basis it was 2023 to today. We're still in it.
Yeah, we were looking at the numbers this morning. So, on a per capita basis, your per person basis, New Zealand, we've recorded about a 4.8% cumulative recession on a per capita basis. If you look over at Australia, like you said, they've avoided a recession in real terms. They have, like us, had a per capita recession, but the difference is that theirs was only a cumulative 1.7% recession. So big differences there.
Yeah. Absolutely. So their economy is running better than ours at the moment, and it just comes back to an economy that's running like that, and you've got 4.7% wage growth.
In Australia, 3.4. Sorry.
Oh my God! You said 4 point something.
Sorry, 3.4. Correct that.
Still higher than what we
Still
got,
higher
right?
than
That's
what we
the
are.
thing.
Okay, yeah.
All the while, our inflation profiles haven't been too different. Like you said, we've come back down to both our inflation here in New Zealand and inflation in Australia, both in that 1 to 3% or under 3% mark.
Yeah.
So I guess it just shows you, that you could probably argue that the RBA strategy was a bit of a better strategy with their labour market still better performing. They've probably had a much softer landing than we have here, which is interesting because now we're at the point of, both central banks are cutting now. I mean, it took, as we said, RBNZ went harder. So, undoubtedly they were first to go and they did have gone harder on the way down as well. So we've had 225 basis points of rate cuts since August last year. But meanwhile, the RBA, they only started cutting in February of this year. And their strategy, again, has been a little bit more different as well. They've only cut, 3 times since February, so about 75 basis points. And I guess they do have that because the economy is in a more stable state. They have the ability to, they don't have to actually be slashing as much as we've had to slash here.
And there are 2 slightly different inflation objectives, right? In New Zealand, it's very much, we target the 2. We want it to average in that 1 to 3% band. It's like, okay, so, I get that. And the Aussie's just a little bit more, it's 2 to 3, targeting 2.5. The Reserve Bank of New Zealand would argue, well, if we lifted it to the Aussie one, expectations just lift and it doesn't really. And I was like, yeah, but it takes you a little bit further away from zero, gives you a little bit more room in the downturns.
And we know that there's some structural changes happening, which on balance could be inflationary with climate change and what that means for insurance and all, technological changes and all that stuff can be potentially inflationary.
Yeah.
So that there's an argument to have a higher. I think we actually did an episode on this one as well, potentially lifting the inflation target, but it is different to ours.
Yeah. I don't think it's a big difference, but I just think it gives you that little bit more headroom,
So with that slowdown in migration, we're obviously seeing it, the ripple effects on the economy. Household consumption has been quite weak because population growth has just not been as strong as what it was. And then also on the housing market, there's been some impact to that, just the fact that it's still very sluggish, right?
Yeah, absolutely. I think, we still have interest rate settings that are probably too high for the housing market right now. And then you can argue that near-term price growth is really being held down by the fact that we have these slowing net migration inflows, and you've got your departures piling up. So what does that do? You're adding more housing to the housing stock. There's less demand. So you really, are seeing not a lot of price movements there. We got some housing data last week. We saw house prices dipped for a second month in a row now. Not that they were really going anywhere anyways. We're still pretty much in that tracking sideways for the past 2 years kind of mode. But, I think what that all comes down to, as we've kind of said, why are people going overseas? It's because our economy is lacking. There's a lack of opportunities. What does that tell you? That you need more stimulus, right? So I think it all comes down to actually needing an economy that has that stimulus as well. And then you're also seeing it, I guess, in the rental space, right, which I guess you could see it as good news or bad news. Good news if you're the rentee, bad news if you're the renter. Is that how you would say it? Because, rental prices are coming off. I think they've up just 0.1% over the last month. So we're definitely seeing pressure coming off there as well. So depends how you want to see it.
Yeah, I think just to remind people, because we often forget, 67% of Kiwis own their own home. So it's a very important part for most people's balance sheets. It's the biggest thing they own and their confidence. So, yeah, the housing market has gone sideways for 2 years after a 17% correction. So there's a lot of people out there that are just, my house isn't worth what it was a couple of years ago. It's certainly not growing in value, and that kind of hinders and it sort of, I think, hurts confidence among households. And then you start thinking, well, actually, so if 2/3 own their own home, then there's a third that rent. Obviously, that's being provided by investors. How are they feeling at the moment? And they're downbeat. I gave a presentation to the Auckland Property Investors Institute last week, the Wellington one a few weeks before that, Gisborne. I've been around asking the same question, what is it going to take for you to get back in? One guy just turned around and said, what are mortgage rates at the moment? And I was like, 5%. He goes, yeah, rental yields are like 3 to 3.5%. And we can't, bank on or rely on capital appreciation anymore. And I'm looking at my portfolio, and we've said it before, we're just waiting for the equity to regrow in that portfolio. So they're sidelined. So property market going nowhere also points to very weak investor appetite and very weak construction. So the whole thing feeds into the economy via the wealth effect, but also simple, number of consents that have been issued, right?
Yeah, it's all just, it is quite centered around that. And that because we haven't seen any activity or anything exciting coming out of the housing market, it's really risking that recovery being just stalled and delayed into next year. Interest rates need to be at levels that are more exciting, or just to provide that confidence to investors and to households and businesses that, go out and spend and go out and invest and boost that activity, because we can't just rely on the agriculture sector or the rural economies to drive us out of here.
But we are.
Yeah,
well, it goes back to that point. What the investor said, look, what are mortgage rates? 5%. Well, they're still, 1.5% above rental yield. So clearly the Reserve Bank's cut, mortgage rates from 7.5 down to 5. That's a big move. But that's just taken the restriction out of monetary policy. It hasn't made it stimulatory, which is our point that we keep banging on about.
So talking about interest rates and also bringing it back to also Australia versus New Zealand, we've talked a lot about the two economies. Somewhere in the middle, we can talk about currency. Probably good to talk about the Aussie Kiwi or Kiwi Aussie cross. MJ, you're going over in about less than a month, which, guys, by the way, this is her first time out of the country. It's really exciting. So MJ, are you watching that Kiwi Aussie cross? What can you tell us?
Not yet. But
a lot can happen in a month. With the
with
Kiwi
this one,
Aussie,
yeah. With this one, probably not so much. Looking at the currency, I was looking at just kind of how it's performed over the last year, and we saw that cross strengthen. So the Aussie dollar weakened at the beginning of the year because of the whole tariff situation potentially hitting Australia more. It's fallen now to around 91 cents, and it's kind of stayed there for the last few months. So if I put money into my Wise account now, it's probably not going to be any different if I do it in a couple of weeks' time. Although we do have even Reserve Bank announcements, whether from the Reserve Bank of Australia or our own, doesn't really seem to affect the cross that much. I mean, there might be some action on the day, but nothing's a sort of sustained move, which I find really interesting because, different strategies.
It's normally very volatile, that cross, and it can go completely against the fundamentals.
Yeah.
They call it the widowmaker for a reason.
Yeah.
I think we've got this interesting situation where you've got the RBNZ kind of being dovish but not being dovish, not being dovish, and then you've got the RBA kind of being hawkish, actually a little bit dovish, and that's the kind of, you've got these two central banks kind of offsetting each other. We'll just have to see how that plays out. I personally think we're in a situation where the RBNZ need to do more than the RBA, and we'll see that play out. If you go into a trading floor in Australia, it's the Aussie Kiwi cross. You really want to wind them up, go in there and say Kiwi Aussie at 91. Like, what are you on about? It's Aussie Kiwi at 109.
I think actually the most exciting time has been watching that one was during COVID, and it hit parity, and it took like a screenshot of it.
So did I.
For the one time, right?
I'm yet to experience
one
that in
time
my career.
in ever.
Yeah.
That was it.
Yeah.
I'm not sure if it traded there or if it was just
Definitely traded at parity, and it happened, I think, after hours or something. I'm not sure, like after Kiwi hours, and I sent it to all my mates in Australia, but it didn't stay there, mate. It touched it, but that was
maybe for a second.
It wasn't sustained. Yeah, it was intraday.
So we're almost wrapping up, But I feel like having talked about all of the Kiwi versus Aussie, how our economies are stacking up, and you said at the start that you're really worried that Kiwis aren't going to have anything to come back to, we have to leave this episode on some kind of positive note. We can't just let Aussies get away with the win.
No, definitely
right now.
not.
So what do you think can we be optimistic about for the Kiwi economy, maybe just in itself or relative to Australia? What do we need to see here to, keep Kiwis here and attract our arrivals too? Because it's not just about Kiwis leaving. We're also seeing our non-citizen arrivals slowing down. So I guess other than the fact that, we're banging on the table for more rate relief, what else, Jarrod?
Well, I guess I didn't mean to come across that pessimistic to start with. I'm just kind of thinking about what's going on right now. The Kiwi economy is in a hole and we've yet to climb out of it, right? Whereas the Aussie economy, I think, historically always looks a little better and they pay a little bit more but you do get taxed a lot more over there as well, just quietly. You lose half your pay if you earn over a certain amount. We only lose 39% here or whatever it is. But, I left when I was 20-something and I came back when I was, late 30s, early 40s. Why did I come back? I was sitting on the couch with my 3-year-old, 4-year-old son. I dressed him in the All Blacks, right? And we were watching a Bledisloe Cup on the big screen. And All Blacks come out, and I'm like, yeah, come on, let's go. And then the Wallabies come out, and he said, "That's my team, Dad." I said, "Like hell."
No.
I said, "No." And he's like, "Yeah, the one with a kangaroo on it." I said, "Well, let's get something straight. That is not a kangaroo, it is a wallaby, and that is the wrong team, and we're on the next flight back to New Zealand." True story.
And so it was.
And so it was. Yeah. No, you got to make a decision at some point when you have kids. Where are you gonna bring them up? And we always wanted to do that in New Zealand. So, I think Kiwis, a lot of us come home, but Australia is a really attractive place to work. It's a lot of fun. Australians are, great banter.
The public transport,
you
infrastructure.
can get anywhere you want to go.
I thought we said happy,
Sorry,
optimistic.
Sorry, yeah. So if we spend $200 billion on our infrastructure, that gets us close to Australia, then that would be a start. If we fired up our economy to the point where we're growing, at 3 to 4% next year or the year after, and away we go, and let's really boost lending and appetite into small to medium businesses. There's a lot of stuff we need to do, but if we did it.
Yeah.
All right. Well, lots of opportunity then. Sometimes it's not always a bad thing. We can just look at everything. We can maybe look at Australia and learn and to copy some of the good things, get that infrastructure going. And as you said, some of this is just a cyclical part of the cycle that we're in right now. Our economy is just diverging a bit and we have to get out of the kind of hole we've been in the last year. But, we are forecasting a better year next year. This year's already been better than last. If we get the rate cuts that we want, then that's going to be even better, right? So, New Zealand, you're still our favorite, right? So,
absolutely.
I'm still
hopefully, hopefully anybody listening this time hasn't been, who's been thinking about going to Australia. Maybe we've convinced you to stay.
Who, me?
Yeah, you.
No, I'm not cancelling that trip. I'll tell you how it is on the ground.
No, but you're only going temporarily.
Yeah.
If you cancel your return trip, then we know.
Yeah, then you'll know.
Yeah. Anyways, I think that's us for this week. As always, be sure to like, follow, and subscribe, and we'll catch you next week. You've been tuned into This is Kiwi Economics, Markets, Mystics, and Mayhem. We'll be back next week for more analysis and insights.
Any views or information shared in this podcast, while given in good faith, aren't necessarily the views of Kiwibank.